Hello YouTube, what is going on guys? This is Kyle Beret. Welcome to my YouTube channel. Today, it's very simple. Today's market open. It's Sunday. Sundays are still great times to catch some pips because one of the most important candles to pay attention to on Sunday is of course going to be the daily. And that's because it's the start of the new day. It's the start of the new week, right? So very simply put, we already talked about the drop that was coming. We talked about it in the group, so I just want to talk about exactly what I saw and the reasons why I saw what was going to happen. So just based off the daily, right, how I always am talking to you guys about being in between zones, right? So when you take a look at the daily, right, this is Saturday, market open, right, and you can just see how strong this candle is. Now, if you want to get really technical, you pull out like a horizontal line, and you can like pop it up, and you can definitely see like, well, we've definitely touched the supply zone, but is that strong enough for price to make a pullback right now? Debatable. Is it possible? Sure. If we pop up the currency strength meter, of course, the currency strength meter is probably going to be favoring the Japanese yen right now, of course, because the Japanese, obviously, we're in a bearish trend, and it is the market open, and the US dollar is not even open right now. It opens up tomorrow morning for the New York time, obviously. So the Japanese yen is probably just pushing it's just pushing right now. So when we look at this daily, we can say, okay, let's go to the 15-minute time frame, because the 15-minute time frame really, really, really is going to help with all this. Because I do trade the 14 and the 15 EMAs, and their distancing that creates the confluence. That is something that I look for. And a lot of the times when price is in momentum, we will just have these 14 EMA pullbacks where price comes and touches the 14 EMA, sometimes the 50, right? Like here's a cross, there's a little bit of a 14 EMA, a little bit more 14 EMA. It still dropped a little bit there. This was up to the 50, but then 14 EMA, because price was in confluence. So it was definitely after the cross, and you can see the 50 EMA is on the top. When the 50 EMA is on the top and the 14 EMA is on the bottom, we're in a bearish trend. If the 50 EMA is on the bottom and the 14 EMA is on the top, then it's in a bullish trend. So when you can definitely, and then of course there is a bit of, when consolidation happens, etc. But see, here's flip-sided. Here is 50 EMA in the bottom. Boom, 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 using the 14 EMA as the support rather than the resistance in this time. But what's very unique about this time is the fact that the new daily just opened. It's a new day, and we definitely knew that, wow, this closed so strong. So why would we not have a continuation of momentum? When you check out the 14 EMA, we can definitely see, okay, so what's going on? What do I know? What do I tell my students? And what do I teach about 2 p.m.? 2 p.m. is the new daily candle, and the first hour is what I call the hour death trap. Why? Because spreads go through the roof, typically 10 pips, then they start to simmer down 1 hour after. Takes about an hour, then the spreads really start to thin out. But the little trick is you never really want to have, unless you're doing some big boy swings, you never really want to have entries right when the new daily candle opens. You want to give it some time, because let's say you enter in a sell right here. Like, let's say this is right when the daily opens. Let's say hypothetically we enter sells here. Well, where it's actually going to place your sells is like, what number is this? 4-9. So we're going to go to 5-9. That's realistically, if you sell here, right? If you take sells here, this is generally where your spread will actually put your sell. So you'll be in already 10 pips DD, which means you would have to be in you're going to have to go 10 more pips even to get 1 pip, right? So that's kind of the hour death trap, is that first hour. But if you wait just till at least 3 p.m., that's just 1 hour after, spreads will die down and you can look for entries around that time. So the Nikkei market is just opening in like half an hour, pretty much. It's 4:30. It's going to open up around 5 o'clock. That's when the Nikkei market opens. So we know that there is going to be volatility soon. But one thing you have to keep in mind is the fact that there is always pre-pushes to these things. So if you look at 4 p.m., which just happened, we actually had a real nice pre-push even earlier. And so just based off of the daily, we already know that price is going to be going bearish just off of the daily, right? So then when you look at the smaller time frames, let's look at the 5 minute in particularly. We do have the first 50 EMA pullback. Now look, we have not touched the 50 EMA in a very long time. Let me move these guys here so I can see what the time is. So let me see if I hit one that says 21. 22 is today. Nope. So this was Friday. This is Friday afternoon. We have not even touched the 50 EMA yet. So when you open up these EMAs here, just by opening up on the side so we can get some better ideas for confluence, this was that first 50 EMA pullback. Now, for a long time, when I really was figuring stuff out, I noticed that price usually off those first 50 EMA pullbacks after a cross, price will continue in the momentum. But let's say, what if it's switching trends to go bullish? Those don't have to always go for long periods of time. But based off the daily, we did have that little 50 EMA first pullback. And now keep in mind, we are already daily confirmed that we're going bearish. So then this is where that opportunity looked to be getting in, because based off that daily, we're going down. And this is where she made the small pullback here. This is the small pullback that she made. That was going back to that 50 EMA, which would have been the 14 EMA on the 15-minute time frame. But when you look at the 5 minute, now we can see, okay, now what we have is what I call a 2-2 confirm, or 2-1 confirm is what started it. Because we have the higher high, now it makes a new, this is actually it's a higher low. But when you're looking for like these changes of trends, something that I like to just call the little 2-1 confirm, where you have a higher high, lower low, lower high, it's switching trend, and boom. Now we broke support and we made the second pullback, so what does that make it? That makes it the 2-2 confirm for change of trend, continue, or not even change of trend, just continuation of momentum, right? So lower low, lower high. So 1. So this is how I look at it. 1, 2, 1. So that's 2, 1, 2, 2. Boom. 2, 1, 2, 2. So it's a 2-2 confirm to continue into momentum. And if you look at the pip count, so we already know there's a daily momentum going bearish. The currency meter was probably just favoring Japanese yen, so we would have already known that we're going bearish. And then, of course, you've got, look, even off of the first pullback here, okay, you're already at 10 pips. That's already my first profit target. Well, let's say you waited for 2-2. Well, there's 14 again, so you're already safe. And if you're looking at the continuation of momentum, where are we stopping? Because we drew up the zones. I already have my zones drawn up, but what I'm going to do is I'm going to delete everything. That way I can show you how my zones get drawn up. So I definitely want to draw where price was already at, and I want to show you where I would have drawn where price wanted to go. So what I'm looking for, see this here, all of this area, you see how we're in between the zone? Boom. Boom. In between zones. This is, look at the daily, right? Look at the daily. We're sitting on this zone, but we are kind of breaking the structure, but it is so strong that we do want to end up going down to the next zone. So this is where your pip count comes in, and you can say, well, how far to the next zone? Well, around almost 30 pips. I mean, there's your money. You can trade 1 day a week and be done already, just catching one move just like this, a daily confirmation for daily continuation of momentum. In between zones, look, we're in between zones. The daily market just opened, and there is your structure. Did we have lower lows and lower highs? Yes. We already had huge confluence. Price is making lower lows and lower highs. All this was a fifth of another 14 EMA pullback to go back to the next zone. Now, what about the 5-minute? What did the 5-minute do? Same thing. Low, low, lower, high. Boom. 2, 2, 1. We broke support. Now it becomes 2, 2 confirm to continue. That is literally textbook bread and butter. Based off the 4-hour, it's a little bit harder to tell because you would say, well, when are we making a pullback? But just based off the daily, we knew that the daily continuation of momentum was there. And that is how I analyze how we go into a trade and how we pay attention to market open. The best things to look at for market open are going to be the daily and the weekly. Because just based off the weekly, look how strong the weekly is. We talked about it in my chat. Look how strong we ended up rejecting. Well, why wouldn't we make a little bit of a pullback this week? We might continue into a bullish momentum too. I do not doubt that. I don't doubt that. But look how strong the rejection was. It was a 174 rejection this week. 174 pip rejection. So why would we not continue off of rejecting that heavily? Of course we're going to continue. Maybe we come down here, hit supply, and then reject, and then start going bull. I don't doubt that. I don't predict where the market is going. I only take what it gives me. And just based off the daily, and the daily we are in between zones, boom, boom, and this is where my bread and butter. This is all I would have drawn up. This is all I had drawn up on my chart, and this was how I assessed the market. 14 EMA confirmation, or 1450 cross, huge gap, which means that we have confluence, we have continuation of momentum, and then you could have just looked at these lower time frames and just sold those pullbacks. Boom, here's the pullback. Even if you waited for it to break structure, there was your broken structure. Small pullback, there it was. Boom, boom. Everything was bearish. Even look at the hours. We just want to keep going. I'm suspecting this is where we're going to have a bit of a reversal. And then we might truck onto a little bit of pullbacks now. I would not doubt that because this is a very strong zone here. You can see price touched it many, many, many times. So I do not doubt that. But anyways, that's all I got for you guys. Hope you're able to pull some nuggets out of it, and I will see you on the next one.